Hello, everyone, and thank you so much for joining us today for our latest sponsored educational webinar with Pacaso. Our guest today is a really exciting one because we have the Senior Director at Pacaso, Tom Mulholland. For those who don't know, Pacaso has quite literally created the category of shared vacation home ownership. And in doing so, they've really created a defining real estate business from my perspective of the next decade. With well over $100 million in annual revenue, this is a later stage company backed by major names like Greg Croft and co-founded by Spencer Raskoff, who's one of the founders of Zillow. With such a powerhouse team of real estate executives, investors, we're going to dive into why Pacaso decided to pursue a Reg A from the crowd, how they pulled off one of the most successful Reg As in history with over $72 million raised from 17,000 individuals. So with that, I'm really glad to welcome Tom here, who took the reins of driving this campaign at Pacaso to discuss what all went into pulling off such a successful Reg A offering and what we can all learn from this raise, both about retail investing and raising capital as a founder. So let's get into it. Tom, thanks so much for joining us today.
Definitely. Thank you so much for having us, Chris. We really appreciate the chance to be here.
Yeah, you know what? It's a real pleasure. I've had the great opportunity to kind of get to know you over the past, I feel like year and a half or almost 2 years from when you initially started your Reg A campaign. And it's been awesome to just watch you guys really kind of thrive through your Reg A, figure a lot of things out, and become, I think, a masterclass or a playbook in how to run a Reg A campaign successfully. But before we get into all of that, for those who are joining who have not heard of Pacaso, or maybe they just know a little bit, give us a little bit of a deep dive on what Pacaso is all about, and also your role at the organization.
Definitely. So Pacaso exists to make second home ownership possible and enjoyable for more people. So like this home behind me, many vacation homes in the United States and around the world sit empty for most of the year. But it's the dream of 75+% of Americans to own a vacation home, to have that time, have that space with family, friends, down by the lake, up in the mountains, skiing, enjoying the beach, to have a really place to go, to be their better self, to be with their family, and to get away from it all, to really own that vacation home. So Pacaso exists to make that home ownership, vacation home ownership, possible and enjoyable for more people through a co-ownership model. So what Pacaso does is, rather than one person buying a vacation home that they'll maybe use 1 or 2 months a year, they've got to manage it, taxes, bills, maintenance, utility, it's not where they are, so they're managing from offsite. We do co-ownership. So Pacaso offers professionally managed co-ownership. So instead of this home being owned by one person, Pacaso helps up to 8 people own the same vacation home. So those 8 people, up to 8 people, that we typically see around 6, they own that vacation home. They actually own the real estate asset. They get to use the vacation home like it's their vacation home because it is their vacation home. They get to own the vacation home. Their stuff's there when they show up. They leave, and Pacaso takes care of all the maintenance, hassle, bills, everything. Pacaso handles the hassle so you can enjoy your vacation and be a better self when you're there.
And also, I think something that's important to note is sharing the upside of if the property becomes worth more down the road, right? Like one of the things, timeshares just drive me nuts, right? Like I think they're a horrible thing for society, right? It's almost like gambling. It's like there's nothing good that comes of this, right? Timeshares, you don't own anything. You're just paying a lot of money for something that you have no ownership of, and it's just lost money, right? It's awful. And sometimes when I tell people what Pacaso is, they're like, oh, like a timeshare. It's like you get that a timeshare is literally throwing money away, right? Like this is you own the property, which I think is incredibly powerful. And the most important part of this is like this is yours. You own a piece of it, you own the equity in it. And down the road, if it's appreciated in value, you have an opportunity to sell it for more than it's worth. There's a world in which all of your vacations for the past decade have been free and you've made money, right? If it all goes well. Right? And of course that's, if all goes well. But all of that is to say is this is a real estate investment and you're making something that's been very inaccessible, accessible to the masses. Talk to me about when this came about, how long you guys have been in business, where you are as a business. And I want that to set the stage as to why you all decided to do a Regulation A offering.
Definitely. And I think it gets to one of our founding principles, gets to the point that you were just talking about, the actual real estate ownership. That's what makes the whole Pacaso system work. So we were founded 5 years ago by prop tech entrepreneurs Spencer Raskoff and Austin Allison, who have an incredible amount of experience in this space. They know what they're doing. They identified this issue. They identified the underutilization of vacation homes. They identified the dream that many Americans and international folks have to own a vacation home. So they put those pieces together and started building Pacaso, just about 5 years ago at this point. So that's when we launched. We quickly received venture backing, as Chris mentioned in the introduction. Pacaso got off to a great start because the idea makes sense. It makes sense to own a vacation home that your ownership and your use is right sized. It's actual real estate asset ownership. So you, for example, Chris, if you're interested in a Pacaso home in Lake Tahoe, you could buy the piece of the LLC that holds title to the home. So you're buying a home, just like you might buy a home in an LLC. That's how Pacaso works. So you can buy it, you can sell it, you have liquidity. It's the key that makes the whole system work, being able to buy the vacation home and sell the vacation home. So that's one of our founding principles. Got off to a great start with some venture backing out the door. We were able to expand quickly into 1, 5, 10, 15 markets. Right now, we're 5 years in. We're international as well. So we've grown to over 40 markets domestically in the United States and abroad. We've got homes in London. We've got homes in Paris, in Cabo, in Mexico. We're also looking into expanding into other locations like Italy, like Costa Rica, while also focusing on our core markets in the United States. So if you, for example, put into ChatGPT top 10 vacation home destinations in the United States, you'll probably see the places where Pacaso homes are. You've got Lake Tahoe, you've got Napa, you've got Fort Lauderdale, you've got Miami, you've got Nantucket, Vail, Park City, Aspen, all the different places like that. So that's where we are today. 40 homes or 40 markets across the globe, and we're ready to continue growing. We have made it through the real estate uncertain times when interest rates shot from 2% to 6%. Buyers were hesitant for a bit there, but over the last couple of years, we've seen some great green shoots, and we've identified that and are aiming to grow and continue capitalizing on continuing demand for second home ownership.
So you decide to pursue a Reg A. I think it's over 18 months ago from when you started, but you could correct me on the timeline there. What was the decision to raise a Reg A? Did you guys have in mind to shoot to raise a whole 75 million from the start? Yeah, let's start there.
Definitely. So this is something actually we started looking into just over 3 years ago. So we've been looking into Reg A for a while because to a lot of our constituents and stakeholders, Reg A was a new concept. If you're talking to our board, you're talking to our executive team, talking to our existing stakeholders, it's not something that they had necessarily heard too much about. Maybe they'd seen some successful examples here and there, but they really hadn't researched it or identified exactly what it was. So we started to put together that research. It really was 3.5 years ago. This is November of 2025. So a little bit more than that, even starting down this process to understand what this type of raise was, what the benefits were, what the process looked like, how you're working with the SEC, how you may have the ability to bring on potentially thousands of investors. So ultimately, when you look into that 18-month timeline, that's when we really got started drafting documents, convincing our stakeholders, stockholders, board executives to pursue this path because we identified some of the great power that Reg A has. So at the end of the day, we ended up with over 17,500 investors. Our thesis did not anticipate that high of a number of investors, but we thought if we're shooting for 10,000 investors, that's 5 or 10,000 more people who have a vested interest in Pacaso and building Pacaso to become a better company, providing us feedback, being in touch, talking about Pacaso with their family, friends, and group, maybe potentially buying a Pacaso home themselves, whether it's now 1 year, 5 years, 10 years, 20 years down the line. So the Reg A concept for us really fit into our idea. And you could speak and hear with Austin talk about this. We're playing the infinite game at Pacaso. So when you talk long term, you talk what our goals are, Reg A hits those purposes exactly right on the head because it allows us to get in front of more people, get the offering in front of more people, and have them buy in and help us become a better business. Whether they're a customer, they're pushing back, providing feedback, giving helpful thoughts and advice. We were really excited to get everybody on board. So that's ultimately one of the big reasons that we pushed down this Reg A path. Capital infusion is great. We were really successful, really excited to raise the amount that we did. But the power that we've gained through the community we've built is substantially stronger than that.
Well, 17,000 investors is a lot. And I think it's important to note, right? Like, this isn't something like TikTok where you need viral millions of people to make your platform valuable, right? Like, each one of your users probably has a tremendous lifetime value to you, because these are big purchases, right? This is not a small client. So, even if a very small percent of those 17,000 convert, it likely brings tens of millions of additional revenue dollars to your platform. And with that in mind, I'd love to understand a little bit more about your business model. And if you have a sense of what a customer is worth to you, I just love to hear that because that helps think about the overall equation of like, you not only got $72.5 million and 17,000 people, but based on a percent conversion, you could be adding a ton of value to the overall business from a revenue perspective.
Definitely. And I think that really is one of the key factors that contributed to us pursuing the Reg A raise. And we've actually seen a significantly larger than anticipated percent of conversion already.
Hmm.
Now, our business and our goal with the Reg A investors is they may invest now, they may invest 20, 30, 40 years in the future. We're just happy to have them in the ecosystem in conversation with us. We're really excited about that. But we've already seen, we just closed our Reg A raise in September. Throughout the raise and since the raise, we've already seen a vastly increased amount of conversion, I would say, from investor to customer. And that was one of our theses as well as the raise, is we thought we have several thousand customers already that might want to become investors. And then we might have investors that want to become customers. So that was a great moment early on in the raise when somebody that I was lucky enough to speak to from an investor relations standpoint, we chatted for a couple hours on the phone. They were going through the financials, interested in learning more about the raise, interested in investing. They invested a handful, maybe $5,000, and then they purchased a Pacaso home shortly after that. So it
Hmm.
immediately was a great proof point, and that was really early on in the raise. And that was just one person, but you know how it is. Sometimes an anecdote like that can spur the whole team on and get everyone excited because that was really rapid, and we were really excited to see that happen so early. So we knew the thesis of Reg A was already paying off in terms of investors becoming customers.
I love that. And in terms of your business model, because we've already gotten some questions on it, can you just explain how you make money, right? Ultimately, okay, I'm buying a part of the home. There's a group of folks buying these homes. Where do you make your money? Are you, increasing the price of these homes after you purchase them? How does it all work?
Yeah, definitely. It's a great question. So let's break it down into a couple different buckets. So the main bucket right now, and this is the great part about Reg A, our financials are public. You can comb through the financials. You can do your research, due diligence. That's what one of the great things about Reg A as well. If you're a potential Reg A investor, you can look through all the company's financials and learn for yourself. So Pacaso, how we make money is a few different buckets. So the first bucket is an upfront service fee. So let's say we go out, Pacaso goes out, acquires a home. Let's just use nice, easy numbers for a hypothetical example. So let's say we acquire a home for $7 million. We put 250K, furniture, fixtures, smart locks, storage lockers, Pacaso worthy art from local artists, unique access codes and keys so you can store your personal belongings there. So upfront additions to the home. Let's say we purchased 7 million, we're putting 250K in, then we'll sell the home on a basis of 8 million. So everybody will be able to purchase for 1/8 share will be $1 million. There'll be 8 1/8 shares. So there's an upfront service fee there. From a customer perspective, it sort of provides a win-win. You're getting an $8 million home for $1 million, and Pacaso is able to capture some revenue on that upfront service fee. So that's bucket number one. And then the rest of the buckets are more ongoing or recurring. So property management, maintenance, as I mentioned, Pacaso takes care of all the hassle, bills, utilities, taxes, legal. We do all of that. So you can show up and enjoy your vacation. So we can capture revenue that way. We also offer financing directly through Pacaso. So you don't have to, if you're hoping to purchase your $1 million share, you don't have to go to the bank and get a loan for a product that the bank may not really understand how to provide a loan for even. We offer financing directly. So we have the ability to capture revenue that way, whether it's a spread or ongoing financing. We're able to do that because we can provide financing directly. So that's another bucket. Bucket number 4 would be a furniture program. So when you think about the overall Pacaso portfolio, we want to make sure that every home in the Pacaso portfolio has Pacaso worthy furniture and fixtures, etc. So we're able to work with vendors and work with artisans to purchase more in bulk, I would say. Let's say we're not just buying one house or one couch from the retail store, we're buying 10 or 15 for the 10 or 15 homes. So we can capture revenue that way. And then the last way, we help with resales. So it gets to your point about being able to sell the asset. So just like your real estate agent would, we'll help with a resale. We can capture a real estate commission representing seller, representing buyer. So it's that upfront service fee, and then there's several ongoing methods to keep collecting revenue.
Hmm. I mean, it's feeling to me like there's six-figure lifetime value in these folks, and certainly sticky because you don't just buy and then sell a home a couple days later, right? You probably stick around for a while. So that's really powerful. Again, when thinking about kind of the dual benefit, I don't think every business, I think there's some businesses where you're just raising the capital, raise capital from the crowd. And yeah, you're going to, maybe get some more interest or people, engaged or whatever, but maybe they don't become total customers, or maybe it doesn't even fit for them to become customers, but awareness and branding, that's all good. But on this basis, I mean, you truly are getting a double dip of, if you're investing in a private company and you're engaged and interested in that, it is very likely that what you're offering as a service or a product is also exceedingly interesting to them. And you truly are getting that dual capture. Which leads me to my next question. Acquiring 17,000 investors is not free. And something I've learned along the way is that there are a lot of founders who come in with this idea that like the crowd will just come. They don't really need to do anything for it. And we've learned the hard way many times over that that's just not the case. If you want to pull off a deeply successful raise like yours, you're going to have to invest in it. You might not be able to get into exact specifics of how much you spent and stuff, but can you talk about some of the advertising strategies and overall strategies you took to acquire those customers, how long it took, and if you give us some parameters of what those costs look like, that'd be really helpful.
Definitely. And I'll start with the big framework. So we ran this race for just about a year. We figured that people would enter our investment funnel potentially as early as September, October of 2024, and would decide to become an investor maybe much later. So we ran the campaign for a significant amount of time, and we figured that might be the best approach to help us capture a wide net of potential investors. So that's sort of the big bucket, how we approach these things. So definitely, I think about running a Reg A campaign almost as like running a startup within a startup or running a business within a business. Creating a new startup, even if you have a great idea, it's not free. You're not acquiring customers for free. Running a business, you're not acquiring customers for free. And then think about our space, the real estate space. How do real estate companies, how do companies like this acquire customers? We thought with that mindset, who are our investors? Who are people interested in this space? What are the different angles people might be considering investing in Pacaso from? Is it emotional? Is it logical? Is it based on the financials? Is it based on the future? Is it based on the founders? So all those different buckets help shape a lot of our different strategies. Like you look to real estate investing generally. One of our main strategies for this raise was identifying where those real estate investors sit. A lot of them are in newsletters. So that was a big part of our campaign. They sign up for real estate newsletters. They sign up for venture capital newsletters, private equity newsletters, newsletters that give them information about products, programs, offerings like this. So they're already sort of in that headspace, in that mindset. So newsletters were a big part of our program. Think about mail, real estate. It's a physical good. It's a physical space. You have a physical feeling of real estate. So there, we thought there's nothing like getting a flyer in the mail for Pacaso. You see Pacaso, maybe it's your first time seeing it. Maybe you signed up and you're interested in learning more, so we could send you something. So we were sending out direct mail to potential investors to expose them to this offering, or invite them to the webinar, or invite them to invest. Lots of different ways that way. You think about social media as well. Lots of different ideal customer profiles in the course of a Reg A raise, but a lot of our ideal customers use social media. They're using Facebook, they're using Instagram. So how can you get our offering? How can you get our company in front of people? Everybody loves to go on Instagram and scroll through these amazing looking homes. That's one thing, but actually making the call to action to invest, how are you going to make that happen? So one of the strategies that we used for marketing as well with our founder, Austin, is we did several press trips. So we were up in New York. We were lucky enough to get some great interviews on live TV, which we sent out to investors and potential investors. We had a great shot of Austin in front of the NASDAQ tower advertising Pacaso. It had the Pacaso logo up on the NASDAQ tower. We worked with them and we're able to create some of these great partnerships with brands like NASDAQ, with companies where we appeared on live TV, FinTech TV. Austin appeared several times on their program, and investors love that. It's great to get in. It's great to get updates. It's great to hear directly from the CEO and to see the CEO interviewed on the floor of NYSE by a financial correspondent. Fantastic. So you could see already, I'm going on and on because there were so many different strategies that came into this year-long campaign that helped capture all of those different investors in different ways. And also, last thing I'll mention is webinars. So a webinar, we could host several webinars throughout the course of the campaign. I think we ended up doing 5 or 6. And we had Austin on, we had our president on, Spencer made an appearance, we had our CFO on, we had several different webinars where Austin talked about his story, where Austin talked about the company, where the CFO, Al Cortez, talked about the financials. And all of those different webinars also shaped the investor journey. Investors are interested in what they're interested in. Someone's interested in the financials, you're sure they're going to come to that CFO webinar. So lots of different strategies through the course of the raise. I don't know if I can get into too specifics on customer acquisition cost, but I think going into this raise, and any founder that's looking into going into a Reg A raise really need to have that mindset. You need to identify what is your thesis, what does something like partnering with a newsletter cost, what does running ads on social cost, is there a cost press trip, anything like that. How can you maximize those costs and generate ultimately a positive and successful return on ad spend? So it's something that we tracked every day. We worked very closely with our broker every day on tracking ad spend, tracking marketing dollars, and making sure that our numbers were acceptable in our mission for responsible growth and raising capital.
Would it be fair to say, and this is what I've seen kind of across the board on average, if you're talking about, I would say anywhere from $1 million raise to a $75 million raise, the odds are, unless you have some outrageous network and you just have people pooling in tons of money, right, just from your own network, if that's not the case, it is fair and reasonable to say that somewhere between like 12.5 to 17.5% of your raise is going to have to go to marketing, admin, all of the key functions of running that Reg A or Reg CF campaign. Would you say that's in the fair range?
Yeah, I would say that's in the fair range. And I think speaking generally, you're right. I think when you look at a Reg A raise, it's not like your $72.5 million is coming from Pacaso's network. Somebody might think, oh, Pacaso just already has a network. They are able to fill the raise just like that. 90 to 95% of those investors are net new to Pacaso. Maybe they'd seen a billboard on the highway in LA 4 years ago. Maybe they'd seen an ad on TV. Maybe they'd seen Pacaso here and there, but most of them are net new to Pacaso. And same with, I would think, most of these Reg CF, Reg A raises, it's new people, it's new investors. So getting in front of them 1, 2, 3, 4 times, people probably aren't going to invest the first time they see Pacaso appear on their newsletter. They might be interested in learning more, attending the webinar. So yeah, definitely good to think about that as a fair range. And it of course can range for different companies. Some companies take different approaches to these raises. They are looking for maybe $1 to $5 million in a Reg CF raise, and they already know that their network can fill up 500K. And that's great to provide that initial momentum. It signals to other investors you've already got money in the door, you've got people that believe in you, and that could help lower your customer acquisition cost towards the bottom half of that range. But you also may have cases where you don't have that organic network, you don't have that organic power. So it's towards the higher end of the range, above that range, somewhere in that area. So definitely good to think about it that way.
Any thoughts on, or that you can share around kind of like number of touch points? Like there's one thing to acquire that top of funnel, get someone interested in Pacaso. To your point, they might join the list, be like, oh, this is cool, I'm interested, but not invest for 3, 6, 9 months, almost a year. How many touch points on average did it take? How long did it take someone to kind of go through the funnel of like, this is cool, to I'm going to give you $1,000, $5,000, $10,000?
Definitely. It's a great question. And there's sort of a branched approach to how Pacaso approached investor relations. So from a high end, of course, you have the glossier, the more formal marketing emails. It's from Pacaso. It's signed off Pacaso. It's on our letterhead. It's all formal, like you'd see in a typical marketing advertising way. So you'd expect investors to get 3 to 5 touches that way before a potential conversion. And then the second branch, my colleague Jacob Johnson and I served as investor relations associate on this raise as well. And we sent out individual emails. We made phone calls, we answered the phone. Those touches are super valuable because somebody who's calling in or somebody who answers the phone or calls you back or responds to an email, you already know that they're super interested in investing in the company. They didn't click on it just to follow along and see what's happening. So that second approach was a far more effective approach. It might take one phone call, couple emails, far fewer than that high end glossy approach, which we love and works really well. So that's why we did both of them in tandem. So I think about more like 3 to 5 in that high end approach to try to drive a conversion, and then also we Pacaso supported with personal outbounds as well.
Yeah, that's really cool. And I think it's something that is actually overlooked is the personalized approach, talking on the phone, having high up people at your organization be involved in those calls actually can have a huge conversion event. One other thing I'm curious about, just from a numbers perspective, did you see, was there a percent of folks who like maybe they came in with 1,000 or a couple thousand and then they doubled or tripled or quadrupled their investment over time and actually continue to add?
Yeah, definitely, and that's a great point to mention because we ran the campaign for a year, so we anticipated that maybe 5% of investors would be repeat investors. And I think we ended closer to 10%. We saw people invest in September, invest in December, invest in May, and then also invest in the closing month. And I think that gets to a couple things. Number one, those touches you mentioned. That person's not touched 3 to 5 times. They're following along for a year. They're seeing 10, 20, 30, 40 touches of Pacaso. They're seeing all our updates, our momentum, our expansion, announcements, new home here, new home there, new tech, introduction of AI to our owner concierge platform. They're seeing all of those things over the course of the raise. So, of course, there are people that are more than that 3 to 5 touch range. That's ideal to have 3 to 5 touches. But somebody like this is a repeat investor. They're seeing 10, 20, 30, 40, and they're investing and literally doubling, tripling down. And it gets to also, I think, a little bit of why investors are investing. They are investing for a lot of different reasons. That was one of our biggest learnings from this raise is a lot of our investors really do have a why to investing. They're not just investing just because. They're not investing like they, go on Schwab and just click any random stock. They're seeing what the story is behind Pacaso. And I would think the same is true for many of these Reg CF and Reg A campaigns. They're interested in the why. They're interested in who the founder is. They're interested in the story, the expansion. So then when they see that momentum, they see that excitement, and they see business progress, they're doubling down on their investment because it proves a point. We had great progress over the year that we ran our campaign, and their why validated itself.
There are a lot of pieces to every raise. There's working with marketing agencies, there's legal accounting, all those things. Talk to me about one, the process to get up and running. How long did that take to get your Reg A qualified? And maybe tell people what that actually means. And then, yeah, kind of how many different vendors were you working with in addition to yourself, which, by the way, I think is pretty much focused full time, right, on the fundraising efforts, just to give people a sense of how big the engine you need to build to really pull off something like you guys pulled off.
Definitely. I'll start here because this stuck with me maybe 2 or 3 years ago. Someone in this space, someone we work with, Kevin Morris, he said these raises take a village. They literally take a village. So when you talk about number of vendors, you're working with marketing agencies, you're working with law firms, you're working with accountants, auditors, CPAs, a second marketing agency, an additional PR person. So you're working with a lot of different people to get the offering out there in lots of different ways. And also to make sure everything on the back end is good. Every single day, I talked about working with our broker, Pacaso. We worked with Dealmaker, and they were fantastic. So every day, back end compliance, investor onboarding, getting everything set up so that you're meeting that legal compliance, because you can't lose sight of that in this whole raise process. This is something that this process, Reg A, Reg CF, it's regulated. And that's an important piece to know about Reg A. And that gets your question about how long it took us to get stood up and get qualified. So in order to launch a Reg A offering, you need to have your offering qualified by the SEC. So we submit our offering circular, our Form 1A, to the SEC. They then review it, have time to offer questions, input feedback. It comes back to us. We go back and forth potentially several times with the SEC. They're reviewing the offering. They're making sure that our disclosures are adequate. They're making sure that anything that's unclear is cleared up. in that offering circular. So that was really a 3 to 6 month timeline just to get the offering qualified and launched. Number one, because you have to be cleared by the SEC. You also have to receive a no objection letter from FINRA. So working with your broker, presenting one of these offerings, a Reg A anyway, you need to be cleared by the SEC and the no objection from FINRA. So two different agencies that you're working with. And also Reg A, tier two, how we were offering a Reg A, there's two tiers. Tier one is up to 20 million. Tier two is up to 75 million. We were offering under tier two. So our financials needed to be audited. So we need to publish audited financials to all of our investors and audited in a way that were presentable to the public. So we worked with our auditor, Deloitte, who helped us uplift our audit, bring that to a standard that met more of a publicly presentable financials rather than just keeping it as a private company going forward. We needed to present our financials in a very clear way to investors so that investors could understand them. So uplifting the audit and then clearance from the agencies, it took a while. It took probably 3 to 6 months. And I think investors or I think founders need to consider that when they're launching a Reg A raise is it doesn't get up and going in a month. You might be able to do that with a Reg CF raise, maybe 30, 60 days, just depending on audit requirements, how much you're hoping to raise. But Reg A takes a little bit more time and planning. And I think that gives investors comfort too, to know that these offerings are being reviewed by FINRA, they're being reviewed by the SEC. This is a legitimately scrutinized space. And that gives investors comfort. That's the goal. That's the goal of the SEC here, to make sure investors are aware of potential risks when they're undertaking these types of investments. So it gives investors comfort. Yes, it takes time, but ultimately it's worth it because it sets Pacaso up to present a great offering and present ongoing financials in a clear and compliant way.
It is a lot like going public. And I would even argue, again, it's just my opinion, not advice, but unless you're at the stage of having a CFO, having a really strong balance sheet already, like this is not a desperation play that, hey, we're going to be out of money in 3 to 6 months and like we got to start a Reg A campaign. Like you'll be out of business before you get qualified. This is a thoughtful growth capital, a way to raise growth capital, but you need to make a fairly heavy investment and having the right team members in place. It's you're working with specific people just for the financial statements to be made. You have to have a separate auditor. I mean, you talked about Deloitte, which I can't imagine what the bill is for a Deloitte audit, but any auditor is going to cost you tens of thousands of dollars at minimum. And then there's ongoing reporting requirements as well. So I always try and scare people around Reg A, where if at the end of me scaring you, you're still like, hey, this is right for us. We're built and ready for this. That's awesome. Those are the people who should be doing this. But if you go, oh, I didn't realize that, that's good. Then don't start the process because you're not ready, right? Um, there's so much involved in this. You are disclosing so much more information than you ever otherwise would as a private company. Talk to me about how your board and in general, to the extent you can, how did they find the overall process when all was said and done? I mean, you raised $72.5 million. That's a big deal.
Definitely. So from the start, I mentioned this earlier, many people hadn't heard of these Reg A offerings or really understood what it was. So I would say this was viewed with a very skeptical eye, which honestly, I think in the long run is a good thing. It made us at Pacaso, our board, independent people as well, working with us. It pushed us to be better, to understand what are the risks, what are the potential areas where we might be blind to, we don't understand what we're getting into here. Viewing it with that skeptical eye was actually a helpful thing because it helped us prepare in advance of going live. If we went live without having these conversations, without thinking about this and stumbled across these issues, that wouldn't have been great. And it would have been a situation where maybe the campaign is going well, but internally, if people aren't comfortable, if they're not happy with the raise, that can cause some strife. And of course, we wanted to avoid that situation. So we tried to get out in front of everything. So it was memos, preparations, presentations, lots of conversations with the board, with stockholders to get everybody comfortable because there was that skeptical eye. People really did get on board because of that long-term marketing aspect of the raise. Like, for example, we undertook a lot of PR on this raise. And we talk about capital raise, we talk about investors, but thinking about all of the public relations that has come from this raise, whether it's inbound, people interested in working with us, businesses and working with us, We worked with a PR agent, Sarah Hardwick, and Entrepreneur was interested in talking to Austin about the Reg A raise. And Sarah helped facilitate that and make that possible. And that was only possible because of this Reg A raise. So then when we say to our board, hey, we've got Austin that's going to be featured in Entrepreneur because of this raise, it only helps build that comfort. So throughout the course of the raise, we had these different things that were happening for Austin from PR efforts, from marketing. So over the course of the raise, of course, there were pitfalls and trials and tribulations. Like I said, it's running a startup within a startup. You fail a lot. And we failed a lot. We had marketing that went totally flat. We had internal conversations, experiences that didn't go well. Of course, there was conflict, but we had to work to overcome that. And that's one of our values as well, because it's communicate constantly, whether it's the good or the bad. We wanted to make sure everybody, our board, our stockholders, our executive team was consistently on board with that. So that skeptical eye, I would say, carried through to the raise. And from the board, every time we'd have a meeting with the board, there were some questions in those initial meetings. Are we going to get there? Are we building the right funnel? Are we providing marketing in the right way? Are we capturing investors? Especially when we launched our raise, it's November and December. Not necessarily the best time from a return on ad spend standpoint. Your numbers might look a little bit different just because it's a little bit harder to get in front of people in November and December. Ultimately, we were very successful. But in that first couple of weeks after the raise started, I think all of us had a pause and said, are we doing the right thing here? Is the momentum going to happen? Are we going to be able to hit our goals? The goal wasn't to hit $72.5 million. The goal was substantially less than that up front. So I would say for the first couple of months, we had that skepticism that helped push us to be better and really drive the team and drive all of the vendors and us every day to be 1% better every day throughout the course of the raise. So I would say for any founders doing this type of raise, you can expect that. You can expect failures, and you can expect you have to adapt through them, communicate through them. That would be my advice. Consistently communicate so you're not catching anybody by surprise. So at the end of the raise, the board already knew it was a success long before the raise ended. They already knew we were headed toward a successful close.
And with all of those learnings, do you think the organization would be open to doing future Reg A's and CFs? Or you advance beyond that at this point and, perhaps you're even looking towards IPO at this point?
Yeah, I think it could go a lot of different ways for Pacaso. So as you mentioned, this for us wasn't this was an offensive race. So we were using the money for growth and expansion. We identified those green shoots, people coming off the sidelines, buying real estate again. We thought, hey, if we raise some money here, we could invest into our product. We could expand into new countries, new destinations. We have new homes that we could bring onto the platform because it's responsible growth. And that's what our CFO lives and breathes every day for Pacaso. It's responsible growth. So it's understanding where that money will be used, how it will be used. We were on offense for it. So it just depends what the future looks like for Pacaso. There are lots of different outcomes where this could go. We think Pacaso would run itself really well as a public company. That was one of the theses of this raise, was that you're sort of operating in a quasi-public space by bringing on 17,500 investors who might become customers, who might become investors. If we become a public company in the future, we think that will hold even doubly true. You become a public company, you have lots of eyes on you, you have the attention of the market. We're already practicing. That's a good thing about Reg A as well, is it builds that public company readiness muscle. So rather than just becoming a public company from a private company one day, we, Pacaso, were already operating in a case where we offer audited financials once a year, unaudited financials 6 months later. So we're already doing essentially a big part of the SEC's ongoing reporting requirements for becoming a public company. So it could look like a Reg A raise in the future. It could look like a Reg CF raise in the future. It could look like becoming a public company. I think that's the outcome we'd like to drive toward. Austin mentioned that in our closing webinar as well. We think the company would operate quite well as a public company, but our opportunities are open. We've done this before. We've learned how to operate in the Reg A space. We didn't go into this raise intending to do another. We think this capital, and especially with the success we had, could push us a long way. But the doors are open for Pacaso.
There's a ton of questions that have flooded in. So I definitely want to make sure we get to those. So last question for you from me. When you think about success for Pacaso over the next, call it, 3 to 5 years? Where are you guys headed? What are your focus areas? What are you hoping to accomplish?
Definitely. I think taking a quick step back around these investors and the raise, there are 17,500 people on board with Pacaso now. So while not a core business objective, core business goal is to continue to communicate with those investors, provide investors updates. A Reg A raise, a Reg CF raise doesn't end when the raise ends. You've got the people invested in you. You need to continue to communicate, provide them updates, and make sure that they're happy stockholders going forward. So I would say that's more of the micro level Reg A type of conversation. But then when we look in the next 3 to 5 years for Pacaso, there's lots of different ways that we could drive success and lots of different scenarios where we imagine being a successful company. Right now, we're pretty small, all things considered. We have a lot of investors. We've received some great backing. There are about 200 homes in the Pacaso portfolio. 3 years, 5 years from now, well, I can't give any projections. Our total addressable market, there are tens of thousands of second homes in the United States, and we are just at a fraction of 1% of that. So we've already built a product with our owners, and you can see on Trustpilot, you can see on the owner feedback that we ask for basically every day from owners. Owners love this product. The Pacaso homeowners love the Pacaso product. So we think we've built that product. We have the product market fit. Now it's just capturing more of that market. So that's what our goal is over the next 3 to 5 years, to continue to chunk away, responsibly grow, and build into that market. Responsible expansion into new destinations where we see demand, and then also doubling down on the core market. So that's number one. Number two is a fluid resale market. We want to make sure that's the key that makes the whole Pacaso system work. If you want to be able to buy your Pacaso, if you own in Lake Tahoe, Chris, and all of a sudden you think, hey, maybe the beach is for me. I'd like to own in Miami. We'd like you to be able to sell that Lake Tahoe home quite quickly, purchase that Miami Pacaso home as soon as the next day, and make it work for everybody in the ecosystem. So it's really those two things. It's responsible growth and then making the ecosystem work for our clients and future clients.
I love it. Well, let's hop into questions here because we have a whole ton. And we'll try to get to as many as we can, and I'll try and get these over to you anyway in case we have to answer them afterwards. Okay, first question. How much of your raise happened in the last 2 weeks before closing? You mentioned that investors take different amounts of time.
Yeah, it's a great question. And especially from a founder perspective, if you're thinking about a year-long Reg A campaign, if you're thinking about a shorter 3-month Reg CF or even a shorter Reg A campaign, in general, in this space, you see, I would say, a significant chunk of that investment coming in the last couple of weeks, if not last month. Because, and I would put that, it's a fairly broad range, of course. Having only worked with Pacaso so far, I don't know exactly what it looks like for other companies, but having done some case studies, I would think it's in the 20 to 40% of your raise is likely to come within that last month. So you might get 40%. If you're raising $10 million, you might get $2, $3, $4, $5 million in that last month of the raise. So it's a waiting game. I talked about, first couple of months, there was some skepticism around the offering. Are we building the right thing? Are we testing the right thing? The materials were working, but maybe not as well as we thought they could be because we didn't understand what the investors were thinking quite yet and what would drive them to actually make an investment. But ultimately, that closing urgency is very high. There may never be a chance to invest in Pacaso again. And if we then go on to become a public company or acquired via an exit, or there's a secondary market set up, there may never be a chance to buy Pacaso stock again. So somebody we've been talking to for 10 or 11 months sees this offering is officially closing. And once it's closed, it's closed. SEC, this is an SEC regulated space. You can't keep these offerings going in perpetuity. So investors needed to act if they actually wanted to invest. So that drove a lot of them to pick up their pencils and actually make the investment, is that closing and being very clear, communicating well in advance with investors when you're closing so they understood that final call to action.
Yeah, there's a lot of procrastination in this market. And one thing I'll say, and this is from an investor lens, not a founder lens. I'll put on my investor hat. Something I try and do, if I truly believe in something, is I back that round. And the reason for it, and I back that round at the moment that I decide I want to invest, not when the closing date is. And some people say, well, I'm going to wait until it's completely done because, I get the same shares whether I invest midway through or all the way at the end. And so let me see them progress and not keep my money tied up in it for those 6 months or whatever, right? And what you need to remember is if you want to see that raise be really successful, one of the ways in which it can be really successful is to continue to invest in marketing. And as they do disbursements, right, rolling closes of the round, they can use those funds to drive the full success of that campaign, maximize the dollars raised to grow that business. So if you truly believe in it, you can vote with your dollars and invest earlier. That's a plug that I think is important. I do that knowing, having been on the founder side many times, I now do that as an investor out of respect for the founder to say, yeah, I'm not going to wait till the last day. I'm going to help you out to get this thing going.
And if you know your why behind the investment, it probably
Exactly.
won't change. It probably, if you find the opportunity on November 19th and you're convinced and you've got conviction around the company, the founder, the team, the product, it makes sense to invest. You've done your diligence, you've got your why. It probably won't change.
Absolutely. This question might be a little bit hard to get at. I'll read the whole thing. Any idea what percent of the Pacaso investors have invested in other crowdfunding campaigns? And then, Chris, do you also know roughly how many people in the US have invested in crowdfunding at least once? So, to Larry, to the second part of that question, we have estimated, well, not estimated, we know from the number of investors and all the individual deals that we're able to track, and not every platform will disclose that. Over 90% do, but about 10% don't. There's been over 3 million unique individuals who have invested in offerings since the start of crowdfunding. Again, not having captured it all in the fact that many of these people are making multiple investments, you're probably talking about right around 3 to 4 million individuals, which would peg it around 1% of the US have actually invested in crowdfunding campaigns. So that's my estimation based on our numbers. To that first part, Tom, do you have any sense of like how many of these people were already familiar with crowdfunding and maybe had already invested in crowdfunding deals before?
Yes, so I have two answers. So the first answer is I defer to Chris and Kingscrowd's expertise here because we, as Pacaso, are just Pacaso, and investors that are doing research on Kingscrowd, I imagine they're probably checking out multiple different companies. Maybe they're investing in different ways. That wasn't something we asked or tracked for investors, so I can't be really sure from a Pacaso perspective. But we did identify and understand one of those angles that I mentioned earlier, one of those marketing angles, people that have invested in companies like this before, somebody who maybe is used to private company investing or investing in a private company like Pacaso, that might be an ideal client, ideal investor. So we, through marketing, attempted to get through those channels. Where does that person live? That person's on websites like Kingscrowd, and what other websites are they on? What are they looking at? What are they reading? Are they reading this newspaper, that newsletter, et cetera? So it wasn't necessarily something we tracked, but something we aimed for in one of our marketing strategies.
Well, I'm going to bet. So, just again, based on our numbers, we believe it's somewhere around, and we've heard this from the platforms, 70 to 80% of investors will be kind of like one time, maybe two-time investors. They're investing in their friend's deal or a company that they really know well, right? And then they're not coming back for multiple. So, about 20 to 25% of the market is like driving the market in terms of consistently coming back and investing in a multitude of deals. I'm going to bet that you guys over indexed because of the type of company that you are, and interesting, fairly savvy investors who are very engaged in this market. That's just my guess. So I would bet you were closer to 30 to 40% of people at least heard of crowdfunding and perhaps had already taken part in a deal. That's going to be my estimation. All right. Next question. Okay. You mentioned that people finish investments and vastly increase conversion. What made the conversion increase? Are you saying increase in conversion for investors or from investors to Pacaso homes?
Yes. So let me back up on that question for a second because I think I was probably unclear in that answer before. So two types of conversion here. So I'll use a different word. Let's just say investors becoming a client. That's purchasing a home. So we went into the raise thinking because we're a business to consumer company, we're not selling jet engines, we're selling vacation homes. We anticipated that a significant amount of investors would become customers and purchase a home. Now, our thesis was way low. We've already seen a great deal more of home purchases. And then also from conversion, if you're talking about the investors converting to become an investor, that's just following the investor journey from initially learning about the opportunity to doing some research and converting to become an investor. So if you're asking about when that happened or how that happened or when we saw that conversion increase, I would say we definitely saw that investor or potential investor to become an investor. That conversion increased most in that last final closing month. just because the procrastination in this space. People thought I'll wait it out. I agree with Chris's sentiment, but that's how it works sometimes in investors' mind. So that was a big conversion increase, and then also providing updates and business momentum to investors provided conversion increase opportunities too. So when we communicated with investors about updates about the business, about earnings calls, webinars, and they could see and hear from us, that increased potential investor to investor conversion as well.
Love it. I'm going to try and hit on a few questions kind of all at once, just as we're running up on time. What was the most successful place you spent marketing dollars besides Facebook and newsletters that you had mentioned? And then you mentioned that there were to expect failures. What were the biggest failures you overcame? And then you mentioned November and December are the worst months. What are some of the best months for return on ad spend?
Okay, failures overcome, big marketing dollars, and then months. Okay, got it. So three parts there. I'll start with the months question. I think when we launched our campaign, it was that November, December timeline. In retrospect, it worked fine. I think for us, we were questioning that because the marketing dollars were just a little bit more expensive. When you look over the course of the campaign, it averages out because some months are less expensive than others. If you think about the time to be asking investors to invest, you could see a thesis going both ways. My personal opinion, if you're looking at Thanksgiving, you're looking at winter holidays, you're looking at tax day in the spring, things are on other people's minds. So they might not be focused as investing. But I remember all the way back to the day after Thanksgiving last year was one of our most successful days because everybody was off from work. Most everybody was off from work. People were checking around on the internet, checking newsletters, reading things, catching up. So you could see it a little bit both ways. It was that Friday we're handling tons of calls and inbound emails because people were off work. So you could see it both ways. I think tax day is sort of a flag that people don't necessarily identify. So they see maybe a drop in investors or conversion right around that deadline, right in the spring or in the fall, and might not know why. That might be one of them. And then summer holidays as well. So it depends on your thesis. Maybe you're able to get into a newsletter a little bit less expensively during those times because the newsletter sees a smaller click-through rate. So you could go both ways in that. But typically, we saw the ad dollars being more expensive in those first couple November, December for us. And then the rest of the year was about even. So big marketing. We did see great traction aside from newsletters, aside from social. We saw some great traction in our direct mail campaign. I think we did some handwritten notes. We did some photos that we sent directly to someone's mail. It's unique. It's not something they get in the mail every day, a picture of a home like this or a collage of different homes. And it rings the bell. It reminds them, it gets them re-excited about Pacaso to literally be holding something. There's one thing about clicking through a newsletter and making an investment. There's another thing to receiving something in the mail. So we saw some pretty good traction that way. We did actually run a little bit on TV. We saw some success and some traction through investments through a couple television channels. So having a campaign video for Reg A campaigns and video assets, key these days. I think that's just a general theme of the internet. People love video. So definitely held true for raises as well. And then different failures overcome. I would say when you're working with these teams and these vendors, lots of different hands are touching the deal. How do you as a founder, how do you as a company ensure that every single person that's touching the deal is viewing the offering from the Pacaso worthy lens in our case, or from your company's lens? How do you make sure that every person has the key messages, core pillars, and everything that we produce, everything that we create turns into something that we would deem Pacaso worthy? So in the course of this campaign, when we weren't quite as tight as understanding like where things were marketed, where advertisements were being placed, now we clearly signed off on everything, but we didn't necessarily understand the exact person who's looking at all of those ads. So some people probably saw some of our ads way back earlier in the year and thought, this doesn't really look Pacaso worthy. This doesn't really meet the brand. And they would write to us and say, hey, this doesn't seem to meet you guys. Is this, what's going on here? So I would say overcoming that failure through collaboration, greater collaboration with everybody who touched the deal, was not some big, flash in the pan failure, but it's a small failure that if you're trying to make sure your campaign is super successful and minimizing those failures, it hits a little close to the heart when you see something that just wasn't quite up to Pacaso standards. So you just have to make sure that you communicate constantly, make sure everybody's on the same page, and you're pushing everything out there to make sure every single person on your team, every person who's touching the deal, is aligned with that vision.
I love that. And one thing I'll say is one of the biggest failures I see people make is they just do these one-offs. Like, I don't know, they get outreach from some newsletter and they throw it in there and they're like, I spent $3,000, I got nothing. It's like, yeah, there needs to be a whole strategy around that person saw it there, but then you're retargeting them here and they're hearing from you here. Like one touch point in one newsletter. Don't do that. It pretty much never works, right? You need a holistic approach to all this, as you're hearing from Tom here. One cool thing, Robert Kohler, thanks for the shout out. You said, I'm excited to buy a home in Incline Village /Tahoe. That's awesome. Very, very cool.
We will reach out, Robert.
Jason Adams asks, curious, what is the average investment amount in a raise this big?
Yeah, so typical Reg A, Reg C, F raises. Chris, maybe you could speak to that.
It's usually $1,000 is right around where it is. So I think we see in Reg CFs, it's trended towards 800. And then on Reg A's, it was closer to 2,000.
Yeah. So when you look at the Pacaso raise, we did have a lot of our clients become investors. And somebody who's able to already right now purchase a vacation home might be able to invest a little bit more. So our average investor invested about $4,000. So it was definitely substantially higher than I would say the industry.
Yeah.
And that's why investor relations is key. You're talking to somebody who might invest $1,000. You need to treat them the same way as if they might invest $100,000.
I think that's a great way to answer it. Okay. So we're running up on time here. I'll ask one last one. I know we have a whole ton of questions here. But if you could summarize it all, what would be your advice to another company wanting to duplicate your success, if not do it better?
Definitely. And you could tell just based on me talking here, I get really excited. I've been living and breathing this space for 3.5 years. We could probably have a 3-hour webinar and might still run up against time. So founders that are looking to replicate and build on Pacaso's success, it gets to that point that you just said. It's a strategy. It's coming up with a timeline. It's coming with a campaign. It's coming up with ideal customer profiles, ideal targeting points. How are you approaching every little decision within your startup, within a startup? How are you approaching all of those things holistically, strategically, and how do they point you toward a goal? It's easy to get lost in the excitement and dollars through the door and investors, and maybe we'll try this, and maybe we'll try this, and to get pulled in a bunch of different directions because there's so many different directions a Reg A could go, and it's marketing and legal and finance and broker and correspondence and PR. There are lots of things happening in a raise. So it's breaking it down month by month. What are your goals? How are you going to hit those goals? What does your campaign timeline and timing look like? What's acceptable from a marketing spend standpoint? It's breaking it down, understanding all of those small goals and how they build towards the larger goals. It's thoughtful. It's not just money comes in the door for no reason other than you're out there. You need to very strategically approach these raises and work with the village because it takes a village to raise this type of money. Pacaso's raise was tremendously successful, but a company raising 1 million, 5 million, 10 million, that's no walk in the park either. That company needs to work just as hard to make sure that the investors, the campaign is run very strategically, holistically towards that goal, whatever their goal may be. So it's breaking it down and identifying those goals before launching the campaign.
Terrific. Well, this has been an illuminating conversation. Thank you so much, Tom, for all of your insights. For people who are interested in getting in touch with you, where can they go? What can they do?
Definitely. So you can find Pacaso just at pacaso.com, Pacaso. And you can reach me individually at tom@pacaso.com. So it's just tom@pacaso.com.
Terrific. This has been awesome. Thank you so much. I hope some of you take an interest in Pacaso. If you're founders, I would certainly reach out to Tom if he's willing to talk to you, to spend some time with him because he probably knows more than almost anyone on the topic of how to run a successful Reg A campaign. I think it's really, really cool. Really appreciate all your insights. Thank you for all of the wonderful questions. I apologize that we weren't able to get to all of them. And to the extent we can do follow up, we'll work to do that. But thank you, everyone, as always, for joining the conversation. And we look forward to seeing you on the next one. Have a wonderful day, everyone. Take care.